I don't know, I started as a kid and shit July last year. So it is like every week, it's a bit of a juggling thing. I would say so. Yeah. So most people ask like what you do to release a head. I don't know, I haven't thought of it. You can use your phone. Yeah.
9 years.
So from beginning you use zero.
Early days, yes.
So mainly use zero.
So people like
It's now probably 95% of our business are resting on this system. So it's actually, it's really a big part of our business. Cannot have a business without it.
This is something painful. It's like sometimes what we're developing is like
Maybe do a quick test. I don't understand your link. Watch the video. Get out the, you can watch one thing. Just watch, make sure all the audio and everything is working. And you send it on I hit the driver really well. On a, I think 2 days ago, I hit the driver really well.
How is it?
The Autumn Cup, I got nothing. 101.
Version 19 is not good enough.
101 is not good.
So when 91.
My game is probably around 90, 80 something like that.
Everybody is. It's very selling, everybody's switching in sales, it's not a matter of time.
It's working. And it's autopilot, so it follows chasing the people first. I don't have to do anything. It's autopilot, so detect the face.
Oh, the face.
Yeah, face the head. And then
you choose someone and then
and if the two are talking to each other, someone talks, they follow that, and then like to the one. Yeah.
I don't know.
Technology guys, we in the edge, cannot live without.
Oh, how do you feel about the ID?
AI?
Yeah, the AI.
What do you mean, AI?
Like, now that Taiwan like the statistics so like Taiwan is like people actually like this is like what the engineering team how to process and then they want to get like just allow the computer to automatically
Sorry, yeah. It will, at a certain level. It's not everything, like he said. You cannot feel. You see the AI music producing by AI, right? It sounds good, but you don't feel sad or you don't feel happy. That's the thing. And at the end of the day, when we're doing business with our customers, that's why he showed the picture. You want us buying first. You don't want the other to do it.
Like CD playing, you know, which is very weird.
Right now,
Hi everyone, we're going to start the second session.
I don't know if
everyone's back, so we're going to start. Second one will be the development of a cash flow model by
if you can put a smile in the people first, you get money.
I believe everyone had a cash flow in uni. Right. So it's a bit different from profit and loss, obviously. In the real business world, we always say cash is a king because even you make profit if you don't have a cash in the bank. You can't pay the bill, you can't pay wages, and you don't. So cash is the key. But how do we deal with the cash flow? That's a very tricky thing. Someone mentioned that Xero has a lot of add-ons. So we use other software, for example, to manage the receipt, which Diana will show you in the afternoon. But we think that cash flow software on the market is not the best yet. We are looking for the best ones, but we found it. So tailored accounts build a system called the Business Intelligence System. We normally call BIS because this will help business to make decisions based on how much cash he will have in the future. What happens if we get more wages, blah, blah, blah. So it's just more customizable. This is why we're going to start. Teddy has been working with us for a few years now, and he likes learning and improving new things. Right? That's good. Now he will give first budget session to a startup client, which is Chen. Chen, I think you start here.
Yeah, no, but it's a little lonely over there.
It's fine. And we just show you the real sort of first budget session with clients. And Teddy will explain the background and stuff. So enjoy the cash flow. Please welcome Teddy.
Okay, thanks Kazuki for the introduction. So I think can you see people can hear me? Right. Okay, so my name is Teddy. I've been here in Tailored Accounts for the last 3 to 4 years. So I've started as an intern. I've gone to as a casual and employed by Harry as a part-time. Now I'm working full-time here, progressing through my CPA career. Hopefully I'll pass my exam in a few weeks' time. Alright, so this is going to be our CFO services first session. So many services we offer as Tailored Accounts, and one of them is called CFO session. So you will see the cash flow template we've built. So as Fuzuki has mentioned, there are softwares out there that we can use to build cash flows and show how cash balance is moving throughout the financial year, but that wasn't exactly what we wanted, so we decided to actually build our own. So that's a bit of the many different tabs there. Very confusing at first glance, I understand. That's what happened to me as well when I first looked at it. Very confusing, but I'll try to explain in a very simple terms as to how they work together and what are the information that we can get out for tonight. Okay, so what's a CFO session? So what's the aim? So it's more about, so this is more like first time project construction, not understanding more about client's business. So pretend that we don't know a single thing, it's a fake company. Just pretend that we don't know anything, and business has been operating for the last several weeks, but they've come to us for the first time just to see whether how their budget is going and how their cash flow is going at the end of the day. Okay? So cash flow tab. So that's the main tab we'll be looking at today. That's where all other information in different tabs actually flow into. So that'll be basically a summary page that you have to look. And if you go scroll down a bit, Avishka, from here, you will see the cash balance graph for the rest of this financial year and next financial year. It looks very negative at the moment because we haven't put in actual figures. So all the numbers that are right now are just random figures we have as a template, and obviously Chen and I will be working on it today to actually make this graph making look better so that clients is a bit satisfactory, or giving a bit of push to client as to what are the things they can work on, what are the things they can improve on, etc. So we have Avishka today as my assistant. She'll be putting in any figures. So if you see weird figures there, just call out Avishka. Don't call out Teddy. Call Avishka and she'll be able to fix it for you.
And then I'll say Teddy.
Yep, I'll be fixing that for you as well. And we also got Chen as our client. Chen? Yep, he's our team leader. So he's my supervisor. He always gives me a lot of work, but he's there, my client. So hopefully he'll be able to help me out today.
Do you want more work?
Alright, okay, so let's start this bit off. Just get a feeling of how it works here. You don't have to know in detail. So if you comment to me at the end of the day and say this was easy piece of cake, probably just ask Harry to take my wage off and give it to you, because for me at first time it wasn't very easy to understand at first class. Okay? So Chan, just give us a bit of an introduction about the company so that the audience actually knows what's going on in the background.
I thought you were going to read through that first before we go to the section.
No, just introduction of the company, so I'm going to explain.
Okay. So I'm the founder of a SaaS company, so service, software as a service company, and I work for Facebook. Just assume that. A few months ago, I actually know that there will be scandal coming up, like you're having today. So that's why I'm opening up a new. I left Facebook, opening up my own company, and actually attract quite a lot of clients. So I've been in business developing my own software for a couple of years, but I think it's the right time to start my own. That's why a few months ago I started my first conversation with Taylor Account because I know this business is a cash money business. Even though we're looking quite bright in the near future, but in the very short term, it's going to be tough. So that's why we need this sort of information so that we can make informed decisions.
Alright, thanks for the introduction. So these are the information that we knew before this session. Obviously, that's why I thought it's better for you guys to know as well. So obviously now I'm going to explain what each different tab means in a very short way because we don't have too much time anyway. So this I'll explain at the very last, hopefully. So let's go into the very far right, creditors. So anyone, I'll be probably just asking questions around throughout this session. So if you don't know, don't feel ashamed. Sometimes you might ask questions to me that I don't know as well. So we're all here to learn anyway. So who can ask me what creditors mean here? Show of hands, the brave ones. What do the creditors mean to the business? Yes?
The one who actually owe money. So we need to pay money to those creditors.
Yeah, so those are the ones who take money from us. Basically, in a simple term, those are the ones we have to pay money in due time. So that's basically a negative thing to the business. Next one is the debtors. So for the debtors, very simple term, customers or the clients who we can profit from. So they're the ones who give us the money. That's the positive flow to the business. So these are the debtors and creditors. Do not confuse yourself between the two. One is a bit of negative side and one is a bit of positive side. Okay? And we go to the salary budget. So this is a very new format. This is the one I've created myself. So some other stuff don't like it, but I like it myself, so I'll probably use that from my session. So obviously you see the far left, you see the employee names. We have Eva, just putting their names on there, and Kazuki was giving our MC. So we've got three different sections there. So we've got the wages. That flows back from hourly times the average hours that we work. So that's basically the monthly one we're looking at. So that's the monthly gross wages. Next one is the super. That's the super guarantee. So that's the 9.5% of the gross wages that you actually look at. And that's the obligation of the employer to actually pay within Australia. Okay, next one is the PAYG. So that's the pay as you go. We'll be showing you how we normally calculate the pay as you go tax for this gross because we'll be adding another employees and etc. So we use something called the ATO or PAYG individual calculator, which is on the screen right now. Some of you might have looked at it, some of you might not. We normally use this because that's from ATO. Never can be wrong. If wrong, then we can blame them for that. Okay? So that's a bit of our salary type, how we're going to calculate the PAYG. We're going to move next to the new expected sales. I'll probably abbreviate that as NES throughout the session. So if it's NES, just think of it as new expected sales. So two sections to this. First one, contracts being exchanged. So today I'll be asking the client as to whether there are contracts that has been exchanged between when we had the first meeting and the meeting that we're having now. So that's the contract that's been exchanged, that we can firmly confirm that there will be those figures that put in there will be an inflow of business cash. The second part is the exchange yet to be exchanged. So they're not actually the income that you can expect, but you can there's more like a 90% guarantee that you'll be exchanging the contract. So you actually put it in the figure so that we can actually anticipate there will be a positive cash flow. But those ones, the second part, won't be flowing back into the budget because we haven't confirmed yet that the income will be flowing back into the business. But the first part, yes, because contract exchanged, money will be flowing back from next month or whenever the due date is. But the second part, not yet, but we call it hot leads because we know it's more like highly chance that in the next few months there'll be contracts being exchanged. There's a bit of a eyes tenting, thinking a bit confused, are you? Or
Yeah, I'm okay.
you're okay? You're okay as well?
I just have to squeeze because my glasses aren't very good.
Sorry? Not readable.
You want to zoom it in a little bit?
Okay, let's zoom in a bit. Yeah, just feel free to interrupt me if you can't see anything, if you don't understand, so I can explain a bit.
More? Are you okay?
Not good.
Good now?
It's alright. Yeah.
Just make it as not as loud as possible, but
As long as they can read the lines, I'm more than happy. Yeah, because
Yeah.
I could see the twitching eyes a bit, and I thought, am I explaining things a bit weird, or is it that something wrong with the computer? Okay, so as again, first part comes into the budget, but second part we did it for that's for a reference to be seeing the exact good picture of the business, because there was a high likelihood there will be a asset to us. Okay, so that's it for the new expected sale, which is NES. Now we have a budget test. So we have two different budget tests, one with the GST and one without the GST. Please don't ask me why we do that, because that's for the purpose of this template, and we want to calculate GST. So basically the first step that you're looking at with GST right now is basically without the GST, sorry, I can't read it right now there. Okay, so yeah, one without the GST is basically the P&L, the profit and loss report, normally from Xero or any other software we normally use. We just pull out the report and then we put in the figures there. The one after that is the with GST. We manually calculate the GST from without the GST. So whatever you change the without GST tab flows back into with GST. So it just shows one of the formulas there. So obviously GST is 10% in Australia. So whatever without the GST, and if you assume that they include GST inclusive, then you add 10% on top, which is 1.1. So you times 1.1 there. The ones with the yellow highlight columns are there. You see a very common thing there. They don't include GST. So we don't multiply by 1.1 within the with GST tab. So if you see it, it's just flowing back from monthly budget without GST. They don't multiply by 1.1. So it's better to highlight so they explain, because those are the things that we don't include GST, and they shouldn't include GST. If they do, that means you're doing a wrong job. Okay? And the last tab I'll be going through is the cash flow. Don't want to explain too much as of yet. I want to do it at the final stage. But as you can see, whatever the monthly with GST that you're looking at will be flowing back here as a business income and business expense. See what's the formula there? Can you see, guys? Yep, that's the one with GST there. You guys can see at the top there, it's flowing back. So what we're doing is we're excluding the GST out of it, so that whatever that we look at right now is without GST here. So that's a bit of calculating GST back and forth. So I'm not going to go into too much details, but that's the fundamentals behind it. We have the business income, we have the business expense. So that's the P&L items, the profit and loss. Now we have the non-P&L items here. So those are the ones that are not in the profit and loss report, or we're the ones that we have to pull out from profit and loss reports to show the accurate information or data. So think of cash flow as a bit of very simple term. I don't want to mislead you here, but think of it as a balance sheet with a profit and loss. So it's a bit of combination of both. So as you can see in the balance sheet items, we have the creditors and debtors, which is showed in the few different tabs there, but they're included in non-P&L items because they're actually from the balance sheet. Am I correct? Yep. So we also have a few different things. I'm not sure if they're there or not. Drawings, loans, or ATO payments. We would rather include them as non-P&L so that it depicts in a different picture, because they shouldn't be technically in a profit and loss report. But that's for the operating business expenses and income. Okay? So that's a bit of the logic behind how we normally work, how we worked out this template. We hope to get a software that can do this for us, but we haven't found one yet. So hopefully we will find when machine learning and all this AI, blockchain technology just kicks in and kicks us out of industry. Hopefully not. But yeah, so that we can actually put this in the online and it can be real-time data. Right now what we do is, once we reconcile Xero, QuickBooks, or Mayo, vast majority of time Xero, we pull out the data from Xero and then we input it there so that it gets updated every month. So that's what we do. Hopefully in the future we will have to do that. Okay? So I think this is more about what Sam mentioned. It's more about advisory rule here. So it's about pulling out the information from the data given when it's all reconciled. So all these accounting softwares are out there. We not give you any information, because information is about making informed decisions. But this is more about Xero and all these QuickBooks and Mayo that I keep mentioning are just about reconciling, basically keeping an accurate real-time data, let's say. Actual data that you can look at the point of the business, and this is pulling out the meaning from that data. So this is what the template we use. I think this is up to your expertise, skills, and your experience as to how much information you can drive out of that, so that you can explain to the client what is actually happening. So it can be that we got some clients who's making a profit, but in terms of the cash flow, it's going lower, and we could find out that, oh, it's because you're pulling out too much owner's drawings. You're spending too much personally, that the profit is going into a negative balance. Okay, there might be too much loans that's pulling out the profit down, so that the cash balance is going negative. So we will show you how all these factors or matters that I've mentioned actually do affect by showing you the graph. So I'll be interacting with Chan, our team leader, pretend that he's the client. He will be the information feeder to us. So we'll be putting in the information, but he will be giving us the information. Okay, and we'll be analysing the information together. All right. So let's give it a bit of an introduction. So Chan, let's start, shall we? You ready?
Yeah. Well,
Alright.
I thought I already did introduce.
Yeah,
myself.
you did an introduction. So we're gonna start the cash flow session. Sorry.
I'm the client. I'm a king.
Okay. So he's the king. So many different ways of using this template, but I prefer using NES tab first, because that's the information that I do not have got no idea, and we need the clients to give us information to drive the value out of it. So, all right, Chen. So can you give us any? So since last time we met, obviously there will be contracts that has been exchanged. Can you explain to the audience and to myself as to what are the contracts that has been exchanged?
Okay, so a few weeks ago before this meeting, Telstra called up and they agreed with our contract. So we have in contract, so let me get some numbers up. So that's with Telstra, that's a big one, but it's really just a demo for the next 12 months. So we have 4,500 per month, and that's will started in April. That's what they confirmed to me.
For 12 months.
And that will only last for 12 months because Telstra really want to demo our product.
Is that GST exclusive or inclusive contract? No.
It should be inclusive.
That's the inclusive amount? Okay,
Yeah.
thank you.
And then I also have Vodafone. So, but they only wanna have the 3,000 per month. So, because our subscription, we can either increase or reduce the benefit, and that will increase or change or decrease the price that each client will pay monthly. So now we have
Okay.
3,000 again for 12 months.
That's also GST inclusive,
Yeah,
yes.
and that will be all GST inclusive. So the number that I'm giving you today probably will be inclusive because in top of my mind, I just know that's what they will have to pay us.
Okay.
I don't really care about the GST.
So we can take all the figures as GST inclusive.
Yeah, GST is ATO, and not everyone like ATO, especially because. But the thing is, so long as I make money, then I'm happy to pay.
Okay.
Alright, so so those are the two new ones
Okay.
that I haven't got any new income yet, but they're expecting stuff.
Okay, so contract has been exchanged, so money will be
Yep.
flowing back. So for the nature of this SaaS company, software as a service company, there will be IT subscriptions every month or let's say every quarter or semi-annually. So that's more like a repeating sales. So it's very consistent in terms of income flow, and it's better to capture all that income because it's very different to all this retail and all other businesses. All these ones have constant flow of income, so better to manage cash flow in terms of business aspects, I'll say.
So I mean, for our business, when we argue with the client about the contract, when we negotiate it, we tend to make it monthly. But that will actually help our cash flow because we are a cash burning business. We want to know exactly how much money coming in and how much money coming out each and every month. We don't like annually contract because that's when money got received or pay up front. That means I have 20,000 to spend and I might spend 20,000 in just 2 months. And that's just the risk of the business. So by putting the monthly invoice into the system and trying to negotiate the monthly payment, that helps our business a lot.
Very interesting to hear. Not many business owners have that much insight of the accounting side, but let's say, let's for this case, he knows that much. Very surprised. We'll be very surprised if business owners can give me that answer.
I used to be an accountant.
Oh, right, okay. Alright, thanks for letting us know.
I put up the wrong number in the board report. That's why I got kicked out.
Why got kicked out?
But I understand what you are doing. So yeah.
Alright, okay, thanks for more insights about your background there. Alright, so those are the two contracts that we see. Can you go back to the without the GST tab so that they show it flows back? So if you see it on the line something, line 8, you will see new expected sales flow. You see the formulas there that divides everything by 1.1 because we are taking it as a GST. exclusive in this tab, but one of the figures we put in the new expected sales was GST inclusive. So we are taking GST out of it. Bit of math formula, if you can't get it, please ask Chen later because he was previous accountant. So just a bit of how it works together. So it flows back to the monthly budget tab without GST, and as I explained, it will be flowing back to with GST by times it by 1.1 there. Okay? So back to the NES tab there. So obviously that's the part that goes into the budget tab. So the second part I explained is where contracts have not been exchanged, but what I call it hot leads that you expect that the contracts will be exchanged in the near future. So Shane, any updates on that so that we can actually see the clear picture of the business?
So I have two, but this is not firm, and I can't tell the name of the client yet until the contract is signed. So
Okay.
just assume it's A and B.
Yep.
A is, we're expecting about 10,000, but starting next financial year, so I'd say July, but that will only be for 6 months. So that's is in negotiation at the moment.
Okay.
The second one will be 8,000 per quarter. And again, we really try to negotiate it monthly, but they don't agree with that. They want to pay it up front, which is good for us, but at the same time, there's a risk of spending too much money in one per quarter, and that will last for just one financial year.
One financial year. Okay. So is there a chance that the contracts, for these ones up there, with the contracts that has been exchanged already, are there a chance that the contracts will be extended, or is there a less likely chance?
It's likely that will be extended, but the thing is, we are a new product in the market. Given that, so long as there are benefits that the client can get from our product, then assure that they will extend. But after that, they'll be on month-by-month basis, unless the client is really big and we really want to negotiate for a 12 month, but 12 month will be less likely after the first year.
Okay, so you can't really guarantee 100% that contracts will be extended.
Yeah, I think just like Zero and any other product, right now in the moment they don't want to try to lock people into a big contract, but rather month by month and no locking fee.
Okay, so since the cash flow itself has to be very conservative, maximizing the expenses and lowering the income, so we're not going to put additional months for that, so we're going to be very conservative here. We'll leave it at that. Any other information that we're missing from that tab at the moment?
No, I think that's all I got from now.
That's all we got?
Yeah.
Right, thank you. So we're going to see it, go back to the cash flow and let's see how it actually flows back into terms of the graph. So I think it's slanting a bit. As you see, the slope has been turning a bit less negative, let's say. So we'll actually can see that it's actually driving more profit in there. So as we go out, we're just jumping back to cash flow to show you guys how it's actually flowing back into cash flow. As you can see in that line, we've got actually figures there that shows new expected cash sales. That's every month now. That only includes on the first part, the ones that contracts has been exchanged. The ones that have not been exchanged yet, will be just sitting out there. At least we got an idea as to that. Probably from July, from start of next financial year, we can expect more cash, and obviously the business can actually plan for that upwards. Okay, so that's a bit of NES type session. Obviously there will be more complicated stuff in the real world, but for now, I just want to show you how it works all together within the template. Okay, so we now go back into the debtors. Alright, so obviously we have access to the accounting software, so I've actually pre-filled this already. So as I said, debtors are the clients, they're the ones who are going to give us money, the ones that we have to chase up for money actually. So we've just mentioned about this random names here, bit of fake just from the demo company, but we actually can see currently we have 100, one there. I think the formula is not right at the moment, the sum isn't going back and forth right. Would you mind just fixing that while I'm talking? Yep. So obviously at current you have 110 outstanding. In March, obviously that becomes around 80 plus 645. Who's smart at maths? That's 1485.
Mary?
Something like that. Somewhere there, guys. Yep, 1485. I was right. Okay. So I normally look at the total receivables per month to see how many are outstanding. If it's standing on the order, I'll be probably asking a client, which I'll be doing right now, whether that's a bad debts. Okay, so client, Chen, can you confirm us that TYP we have $110 outstanding as the order periods right there in column F?
No, I think they're all current. We expect money in early April. So
Early April?
Those are the demo section that we did for those companies, but haven't signed in yet.
Okay. So it is important that we know whether
they actually pay for us to do demo, which is good. Which never happened.
Okay, thanks for letting us know. Alright, but let's just adding a bit of information there. So that 110 sitting there in column F, line 7. So we have to ask the client whether that's bad debt or not. Okay, so we cannot actually just let it sit there because it's going to give a positive cash flow. It's going to give a 110 plus in the cash flow.
Oh, no, I remember that 110 there. They can't pay it off in full, so that's why we have to do instrument. And that's how we actually track it. We do invoice monthly in our system.
Okay.
Every month they want to pay just around $10.
Okay.
But they actually don't pay anything until now, so I might have to put them into that collector.
Oh, that collector?
Just remind me later, but this section I'll put them into that collection.
Yeah, so it's put about building a turnover. So it's about turnover or flow of your cash. So if you let it sit in there for 5 months out there, every month you have 110 not coming through your cash flow, and that's a bit of an issue, right? So it is our job to pick it up and say, what are you going to do with this? What are the things you can do? What are the things we can do for them? Okay? So these are the options that we ask. Normally they will say that that's all. Normally they don't go far as debt collector. Please don't go that if they don't pay you for 3 months. But it's better to know. Alright?
Well, it's not illegal.
It's not illegal, yes, but it's a bit of client relationship here. So it's a bit of personal.
I mean, they don't sign in. No relationship.
Oh, okay.
They're not signed in.
Oh, they're just, okay, that's fine. Alright, so rest, I think it's looking okay. We got 2 ones in March for RBA and customer ABD, but they're expecting, so you're expecting to be all the customer ABD bills by April, am I correct?
Yep, so our term is 7 days.
7 days.
Then now they reaching 1 month, so.
Yeah, debt collector again.
Well, not yet. But
Not yet, okay.
expecting in April. After that, we'll decide.
We'll decide, okay. We'll decide from the next meeting then. Okay, so for the RBA, we have one from March. Are we able to expect it in April or May? Is there any negotiations going on with all that?
No, May is fine.
May is fine?
Yeah.
You're happy with that?
Yep.
Okay, that's fine. So that's a bit of a debtor side age receivable that we have. That tab in line I and J, that's where it flows back into our cash flow. So mention that that's a bit of a timing there. So if you go back to the cash flow for me, you will see the debtors in line 28, and you will see that ones that's going in April and one's in May. So that's a bit of timing issue there. It's more about making decisions. Timing is important because that's the whole point of cash flow. So we actually line that up so that we can. So whatever that we put in debtors, but we have back here. So we have to be careful in putting in numbers there. So just showing you how it flows back here. So that was it for the debtors, and we're going to go into creditors. So as I briefly explained, that's the creditors and age payables. Hopefully you guys know those terms, hopefully. And those are the ones who take money from us. Yes?
So just a quick question. So is the column in the April one? So was that money that you received in the thing?
That is that.
Because like you said it's in May 18, isn't it?
Yep,
There's like
May 18.
$105 left.
Yep.
So you haven't collected that one yet, right?
Yeah. So whatever it's in here, we haven't collected yet. So we're expecting that we're going to collect those ones in April and those ones in May.
Okay.
So this is we're looking at the future here.
Oh, okay.
We're not looking back. We only look at the future. Okay. Does that answer your question?
Yep.
All right. Let's go into creditors. Same format. So I won't be explaining too much here. So this is for April aged payables or creditors that we have. These two reports, all the debtors and creditors, I'm not sure if Sam showed you because I was stepping out for 10 minutes. But this is directly from Xero as well. Xero can actually show you and can divide it into months as to when they are from, how long they've been outstanding. But there are many different report functions there, but this is the most simple one that we normally use. So as you can see, we have currently, I think the formula is wrong for the sum as well again. Please fix that for me. So this is all from Xero software, assuming that we have access to the Xero. So Chan, please confirm to us that all the data that's here is actually corresponding with your thoughts. So let's say you are expecting to pay that QWE in April of 250, which is the outstanding rate, correct?
Because we have an agreement with our suppliers that we will pay them 1 month after they issue us invoice. So every outstanding in March should be paid in April, and every outstanding in say April should be paid in May.
Okay.
So you can assume that's all the way now.
Alright, that's fine. But we got this X, Y, Z and QPR paid after April. So one is paid in May, one is paid in June. Was that your call? Because I saw due date as very different and plan date was different.
I'm going to assume those can be paid in May.
May.
Those things can be paid in May. Yeah.
May 1 is in June, so it's okay. It will be
March we will pay in April.
okay.
So the last one we paid 4,500. We pay in April, and
In
then
April,
the
yeah.
other two we pay in May.
The other two.
So we really want to keep a good relationship with our suppliers.
Okay.
Because we cash burning, but sometimes when we burn too much, we go back to our suppliers and say, can we give us a bit of credit?
Of course.
So that it increase our ability and at the same time increase
Mm-hmm.
our line of credit with the creditors that will improve our cash flow when we need it.
Okay. So as Chad mentioned, very detailed. I thought I was also with an accountant. Yeah. So obviously it's a cash
I used
burning
to be a
business.
banker too. So.
Okay. Alright, so it's a cash burning business. As a startup, there will be times where your cash will be hitting the bottom. That's where you have to make an informed decision whether you need more capital or more investments coming in. So obviously one purpose of the cash flow is to see how the cash level is going. If it's too low, should we take a loan or should we look out for more investments? So those are the decisions that we can make based on the cash flows. So in terms of the age payables, the important thing is that we have to see how much we're owning, because that's the downside of the cash flow. That's the money that will be going out in the future or near future, hopefully. And if your cash flows is so low that there are chances that you might not be able to pay, then it's more to start early and negotiating with the supplier that they give us more time frame as to how the business is going. I'm pretty sure they're not too harsh to just put in debt collector straight away once you explain how things are going. So hopefully they'll be able to understand our situation. And as you can see, it flows back to the cash flow again. It's all negative figure. Could you please just highlight it as red, please, so it stands out a bit for me? Yep, so as you can see, it's all negative. It's going to affect the business cash flow as negative going out of the business as cash. So we expect April 4,750 will go out, and in May there'll be 1,500 going out as well. So obviously in real life there'll be much more money involved, but for now I just wanted to show you as to how it works together, all these debtors and creditors, how it flows back. So this is non-P&L item. So obviously debtors and creditors are balance sheet items, but I think of it as line 26 to 30, or the non-P&L items as balance sheet items for simplicity. Okay. So that was it for the creditors and debtors. So since we touched on NES, creditors and debtors, I'm going to go into the salary tab. So basically the payroll. Okay? So obviously for many businesses, especially on the retail or hospitality businesses, wages are one of the major expenses they have. Obviously it's very important that we track it. Mainly 3 different things: super, PYG, and wages. So I've divided into 3 sections I explained earlier. At the moment, I know there will be 2 employees there, Eva and Fuzuki. Getting paid a lot, I can see. Hourly rate is $26. I think it's just too much there. But okay, I'll leave it there. So Chen, just give us an update as to if there's any things that we have to add or change.
So with Fuzuki, we agreed to increase her salary. Not salary yet. The salary. I think the rate is now $28
Wow.
per hours. She's a co-founder. So make sure she get some good rate. We know that we're burning a lot of cash, but I think employees should be
Rewarded for that?
rewarded.
Okay.
We also have a new employee coming next financial year, so that's the sale officers, where they're going to go out and do a lot of work to get clients and stuff. So that'll be adding $35 per hour
Okay,
for that
$34.
salesperson starting July next year.
Okay, so
This
How
year.
many hours?
I'll be a full-time position.
so 38 hours per week. Okay. So depending on the businesses, sometimes they work full-time as 38 hours or 40 hours, but that's depending on the agreement. For this kind of leadership, that's 38 full-time. Okay. So obviously we have that, but the issue right now is the PAYG here. All right. Because the PAYG has to be annually updated. So I'm just going to show you what Vishka will show you as to how we actually normally calculate PAYG. So Vishka, please.
Do you want to talk them through it or?
I should talk that through. Okay. So go back to the sheet for me so I can explain the figure as well. Okay, so you have the $35 times by 38 hours, which is that. So that's what $13.30. I was waiting. So that's the weekly wages that we see. So let's assuming that this is a weekly wage we normally pay. You have the options as weekly, fortnightly, monthly, and quarterly. That changed the tax rate. So make sure you select the correct one. And if you type it as gross earnings as weekly at $13.30, make sure you put the whole figures. No decimal places, please. Okay? So if you go scroll down, we're not going to tick anything. These are all different ones. If they have hacks or anything, Medicare, you have to put the different options. But simply see, we leave it out, and we're going to press calculate on the right bottom corner. Alright, so that's the amount of tax that we're going to withhold every wage payment from that. So the net pay will be that minus the PAYG. Okay, so that's normally how we calculate the net payment. So just type it in for me, so it just shows how it works. Yep, so that's it. So obviously, we have all the formulas built where all this column F and G and F will be flowing back and forth together with B, C, D. So hopefully that will work. Yeah, just give her time to enter everything there. Yep, so that's not what we normally do. So if I want to just show you as to how this flows back, so if you go into the monthly budget with the GST, I think it was. Yep, you will see the super and PAYG sitting here. So those are the figures that flows back here in line 76 and 77. So that's where we got all those figures. The reason why we separate them out, because we want to separate in the cash flow. So that's the main reason why. So there are all the reasons why we separate them out. Sometimes there might be issues with the formula, but it's our job to pick it up. So all these super and ATO PAYG, do not worry about ATO GST yet. So all this line 26 and 29 right now with super payable. Normally super is paid every quarter. That's why you see one in July, one in October, and so on in every quarter. And with the PAYG, two cases. It's either monthly or the quarterly. We assume in this case it's monthly. So ATO looks at our sales of our owners' turnover and decides whether we have to pay PAYG monthly or quarterly. So we get the letters from them, or employers can decide it as well. Okay? So you see that flowing back and forth, so that's good. Alright, so there was Joseph got the summary text just to see if I missed anything. So I just showed you guys how to.
Question.
Yes.
The title is always down. PAYG per weekly.
The heading.
Oh, the heading. Oh, yes, yes.
No. The new employee is weekly PAYG, but for the previous two is fortnightly PAYG.
Right. Yes. Vishka. Let's leave it to Vishka. Okay, so make sure this doesn't happen. So if it's weekly, then normally you have to put it as weekly, fortnightly, monthly, depending on that. The PAYG will change, as I explained in the calculator. Make sure it's consistent. Should have been my job to pick it up, but just too focused on thinking about what I'm going to say next. So let's let it go for now. So as you guys know, the principles behind it, I'm happy with that. As I said before, you don't have to understand everything. If you understood everything, ask Harry to take my wage to your bank account. So yeah, that's it. Bit of a brief about how it works together, how we calculate the PAYG and extra. Any additional details that we have to mention, Chen? Or are we done for salary?
No, we're done, sorry.
We're done? Okay, that's right.
Enough before.
Alright. So I think we're okay for time. Okay, so we touched the annual NES tab, salary tab, debtors and creditors. So we're going to go into the monthly budget without GST. So this is where a lot of expertise come in, and not too much expertise, but more of a lot of information from the client that has to feed back in. So obviously once we set the budget, we normally change it. So we can measure how actually it's going by reconciling things in zero, pulling out the P&L, and creating another column next to it and say, this is the actual P&L that we have. How is it comparing to the budget that we have set up? So we don't normally, once we set up, we don't touch it. So that's what the purpose of the budget is. So obviously we're going to start from April because we're looking forward. We're still in March. We're going to look at April budget first. So we're going to leave line 6 for now, but we're going to move on and then we'll touch on income as to how much the income he expects and etc. Okay? So Chad, just give us more information about how you're going with the income, how much you expect other than the NES tab we touched on.
So I can see that you have the interest income there,
Yep.
which I'm not a fan of putting my money in saving account.
Alright.
So there will be no interest.
No interest? So zero interest?
Yeah,
okay.
no interest. Point I want is good return, not small interest. I don't like bank.
Okay.
Again, I'm
So
a
let's
banker.
keep
I was
going.
kicked out, so I don't like bank.
Okay.
We also have two of the existing clients that I think you can put it in whatever, somewhere in there.
Yep, let's put it as sales A and sales B.
So we have Optus on board a couple of months ago, and they are paying $10,000 per month up to June.
That's
And
GST inclusive, so you have a divider.
yeah, and then after that we're going to increase by another 5% from July next year.
From July. Just give us a bit of
July
time
next
so that you
year.
can enter it, please. Thank you. So from July there'll be 10% increase on top of that.
I think it's sort of 5%.
5%. Okay.
10 is unreasonable.
Okay.
5% just for us to cover the inflation, which we already inflate a little bit. We also have version in there for 15,000 per month.
So the second one is a version? Yep.
Yep, and that'll be the same thing, increase 5% in July,
So
15,000. So that's the reason why TLJ and Vodafone are on board.
Oh, right, because you already
contract.
got the existing account.
Version is really good, and I'm
Mhm.
using it at the moment. Optus is not so good, but he's paying, so it's okay.
Alright, looking good there.
Yep, and those are the big one. Probably everyone at the moment. Right now, because we just started up, we really want the market to know us.
Okay.
But the big one, we've been in contact for quite a while before I actually set up the company.
So that's the
So,
clients that you took
yeah.
from Facebook.
No, I'm not taking anyone from Facebook.
Oh, okay. Just wanted to confirm before we're staying under the law. or something.
Facebook is free, where you can give in
Okay.
and take out anything.
Okay. Alright, so we got three different lines there. We got new expected sales we touched on earlier. So we got the old person version, there's an existing client. Since it's our first time budget construction, we just started from April. Okay? So let's go. Just want to show how it affects the cash flow just now. How's cash flow going? Alright, looks very optimistic. For a startup, I wouldn't expect that much positive growth. So obviously we haven't added expenses yet. So let's see how the expenses actually lowers the graph down, okay? So obviously, do you have any other income that you have or any other things that we missed out of
I
this?
think it's a lot of money already.
That's a lot of money, okay.
So I'm quite happy.
You're happy? Okay, very conservative here. There won't be any calls, I assume, because this is a SaaS company. So we're going to move back straight into operating expenses, okay? So obviously accounting fees. You're hiring us, so obviously you'll be having accounting fees something more than 0. So just give us an estimate of figures right now that you
Yep,
have.
so I think I'm paying quite a lot for accounting fee.
Alright.
I'm paying 2,500 per month.
Okay.
Well, that's including you guys' fees and
And yeah,
someone
well,
else.
including
Includes GST. Everything is including GST.
We're an international company, so we actually hooked in with one of our big consultant accountant that have international arms that we can reach out to other places. That's why we're actually paying a lot, but
Okay.
it's to make sure we comply with all the international
Necessary things, yeah.
regulations as well.
So that's going to stay for the next financial year as well, I think?
I assume that they will increase our fee by 5%.
5% again? Okay.
I don't think that you guys have an agreement to increase my fee in the next 12 months, so that's good. So just, I think that's 5%. That's the other company that I'm moving with.
Okay. Okay, let's put it as 5% there then. Okay.
Just assuming. I mean, I'm not too sure whether they're going to increase another 10,000, but otherwise I'm just gonna go to another one.
Hopefully Harry doesn't do that, so let's leave it there for now. Alright, so next one is advertising. So as a startup company, I expect a lot of marketing costs involved, to be honest. There'll be heavy marketing, I assume, is that correct?
Yep. So we're paying an external company to do our advertisings and do the calls, do
Okay, yeah.
marketing. So we're paying 2,000 per month for them currently, and from July we'll push it up to about 3,000.
Okay, so more marketing coming in next financial year.
Yeah, because I think really now we have the product.
Okay.
All we
can
want
prove it,
people
yep.
to know is we want to get it out to the market, get
Mhm.
other to know about our product, and that's
Yep.
why marketing is one of the biggest. And I think
Okay. You only aiming for the big companies here, so you can expect the big income, or?
now everyone can pay for us, but I don't think that the small one willing to pay.
Okay, because it's
Yeah.
quite expensive in terms of.
We haven't scaled yet, so
Okay.
so long as we can scale and
Mhm.
adapt to the small one, then we will. But at the moment, not.
Okay. Alright, thanks for the info. So we're gonna leave some lines there. We just have as a template, so we're gonna delete as we go. We're gonna go straight jumping into software subscriptions there. Okay, so the rest of the line 434. Let's jump there.
I actually have the computer expense in here that I think
Okay.
with the increase in sale, assuming there's no extra fee, but I think I do need extra computers.
Okay, yeah, that's right. Feel free to
I need more probably desks and chairs when I have more people. But at the moment, we have a plan to spend an extra say 5,000 every quarter there.
Just to buy computers.
Yeah, well,
Just confirming. Just confirming.
Mac is expensive.
Okay.
Starting this quarter or?
Yeah.
So this quarter, yeah.
This quarter, and just I think we just need 3 more.
3 more quarters for that. Okay, that's fine.
I mean, and if we don't have enough people to use it, I just want to use it to mine Bitcoin. That's fine.
Love the Bitcoin.
5,000 should be enough for
Yep.
$1 a day.
Alright, that sounds good to me. Sure. Have to see how much loan they have at the moment, but just by looking at the profit and loss, I'll say they're a high profitability business as a startup. I let Avishka just to type in all these figures. She has to do it.
That's it.
Yeah, that should be fine.
Very lucky I'm not doing that job.
So you see, CFO job is really enjoyable, while the accountant job is just, you know, sitting in the
I normally talk through it and do it at the same time, so normally very. So a bit of up and down side, probably because of the super and PATO, all the payments that comes every quarter. So I always expect a lot of fluctuations in real businesses, because there will be payments just jumping out there at one time as well. But this is more realistic. It's getting there. All right. So let's go back to the budget tab. All right. So I just said, if there's any software subscriptions, I suspect you'll be having a lot of development expenses associated with your
Yeah, I
team.
think that for internal development, I think I need to go and buy the R&D expenses somewhere in there.
Okay. Yeah, research and development, we got a 952,
I mean,
so.
we spend big money there.
Okay.
Just to develop future product, but
Okay.
we spend 8,000 currently per month, and next financial year we'll pay around 10,000. So that's why
Every
I'm
month?
cash burn. Yeah,
Okay.
10,000 per month. We'll pay other people to do it as well.
Okay. So we expect as a IT startup, there will be a lot of expenses or investments going in terms of research and development. And also, obviously, the ACT government will be giving you the grant revenue, or 50% of the expenses generally. So we'll receive the grant revenue later on as well, hopefully. We have time to touch that. But for now, we're going to have R&D there. Yeah, obviously, the graph isn't looking too well there. But obviously, this is to show how the business is going. We're not too concerned of the graph at the moment until the final stage. After we have put in all the figures, we'll be analyzing the graph as to what are the things that can improve on it, etc. For now, do not worry about it. We're not going to touch on income anymore. We're not going to go in there, oh, this graph looks weird, we're going to put extra 100K. We don't do that. We just leave it there as it is. Alright? Alright, so we're going to go back into line 35 here, because line 34, development software subscriptions will go into R&D. So we're going to go into entertainment. So I suspect there will be a bit of motivation expenses, let's say.
Just 10,000. Oh, sorry, no.
10,000.
1,000.
Oh, yeah.
Christmas.
In Christmas. So this year Christmas. That's my next financial year. So
And that's for 3 people. That's
any
fine.
other periods, no, won't be any entertainment expenses?
No, they got to pay a lot.
Ah, 10,000 expenses out.
it's already enough for McDonald's.
Yeah. 1,000.
1,000 for 3 people. That's a lot of money.
Yep. That's
Just
fine.
want to get right below the FBT part there.
Yeah, that sounds about right.
There's no tax agent in the room.
Well, that's fine.
Yep, so obviously when he first said 10,000, that's a waste. I'll probably call it of 10,000 of entertainment expenses. So let's keep it at 1,000, very conservative there. So we're going to skip all these lines, 36, 37, we're going
And just give it one lot important. I mean, I don't care about small money.
Okay, let's talk about the insurance then. I think insurance is going to be a big expense as well.
So we pay installment at about $300 per month. I assume that will stay the same or roughly the same. I mean, whatever they charge it, I mean, I can't argue. So just book $300 per month all the way. I'll be happy with that.
Okay, that's fine. Any interest expense?
No.
No interest expense.
Yeah.
Okay, that's fine.
It's all my own money.
Okay. I think you put all the legal expenses as a part of accounting, or is it you're going to put in a separate lines for legal expenses?
I mean, we hired out accountants and consultants who work on those as well. So I think some of the fee will go into accounting
fee as well.
Consulting.
Okay, so you don't expect any separate expenses for legal? Okay, let's leave it there for now. We can leave that for now as well. Marketing we touched on as advertising, so we can ignore. I know that you got very fancy vehicles with you, so I expect a lot of expense from motor vehicle expenses. Am I correct?
Yeah, well, fancy doesn't mean it costs a lot. It's just that you've got a lot of front. But right now, I'm only paying, say, $500 every now and then.
Every now and then, okay.
that's a lot of money because I wash car every year. I don't know,
Every year? Oh, it's a very clean car. Alright, so 500 per month. Let's say.
Yep, I think the rest is fine.
Rent, you don't have an office?
Um,
I'm pretty moved, so.
I have an office, but I don't go there much often.
Okay.
Yeah, it's about 2,000 in rent.
Okay.
It's a very fancy one.
Okay, 2,000 per month for rent?
Yeah, per month. It's right in the middle of Sydney CBD as well as Canberra CBD.
That's only $2,000?
Well, it's really where I meet the client.
Oh, okay.
I don't work there.
It's a very
so I
small
don't
space,
need
it's like a
much-
cafe.
Yeah, very small
Okay.
space. It's
Okay.
like it's a share office.
Okay, that's alright. Alright. So there won't be any increase in rent next financial year or anything like that, the owner?
It's okay for now. Let's go to the next one. I think travel international. I'm okay with that. If you can quickly show me the cash flow